Hello guys, welcome to a Trading Parrot. I'm gonna publish an update on Bitcoin. We just had a move into 97k, liquidity has been taken. I have entered into a position, so I thought maybe it's a good idea to keep you in the loop. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Let's be fully honest, the public at the moment is divided in two teams. There is the team that thinks that the CME gap that we have at 91,800 price with the CME premium or at 91.581 price with Binance spot prices is not gonna get taken. If you remember, we have a very controversial gap here around 80k and we went all the way to 109 and we only took it after 122 days. There are always exceptions when CME gaps take a long time to get filled. There's also this one at 54k that hasn't been closed yet, but most of the gaps get closed in a sensible amount of time, call it within a week or so. I am personally thinking that there is a good chance that we have a pullback. I'm not necessarily saying we must close the gap. I do not have a limit order waiting for taking profit at 91.5. I am just looking at this area to see what happens, how do we react after we have taken the liquidity at 97. Are we going to carry on into 100k or are we going to come back down to do some pullback? If you look at all this range from 74 into 97k, there has been just a handful of pullbacks. One of them was this one from 84 to 78, then this one from 86 to 83, and then the swing lows are almost difficult to see with the eye, particularly if you go into the 4-hour or daily, then you don't see pretty much any pullback. Here we are looking at the 1-hour time frame. That's the reason we can still see them. And the point is, it's not enough pullbacks. We're creating lots of inefficiencies, and the proof of that starts with the fair value gaps. We have pretty fat fair value gaps below the price up until 84.7, and now we have a new CME gap, fair value gap located around 95.250. We just built that one right after taking the 97 that we still had in the morning. So let's go to the 4-hour time frame and let's appreciate the new situation. On the 4-hour, we had a breakout to the upside. We have to fully admit that the 4-hour has been full of fake outs. There's been an expansion in this area where people were claiming, finally we broke down. I wasn't in my short at that point. I was still thinking that we can go for the 97, and that ended up playing out. So now that we went to 97, I enter a new short. Basically, my 95, 500 took profit around 94. And since we got too heavy in liquidity around this area, I decided to close it as a small profit around here and to migrate my short to around 97k. That's what I have done so far. And now the thing is, are we going to go for plan 1? Notice that 1, 2, and 3 are bullish plans, bullish bias. There is also some scenarios where we are bearish, but focusing just on the bullish side, because that is the risk that I need to manage at the moment. I'm in a short, so I need to acknowledge what is my risk. Plan number 1, we go straight into 100k, over 100k. We hold that level, and I need to manage my risk to exit around 99, where there is less liquidity pools so far. We don't know how many shorts are gonna enter at 97, and that could increase this area and make it less good to place a stop loss around that area. If it becomes too heavy, we get too much oil in the pan and then we start frying, cooking eggs there. That is not what I want. If we start oiling the pan too heavy there, my short might be not the best idea to continue holding. The ideal plan for me is number 2 or 3, which is price just takes this liquidity in here. It gets happy just by taking this peak, and then it decides to close the inefficiencies, the fair value gaps, the CME gaps, and the small liquidity, which we have to acknowledge is not that attractive. We just took all this chunk of red, and what there is around the CME gap is not that much from the point of view of liquidity pools. From the point of view of CME gaps and fair value gaps, inefficiencies, sure, then it becomes a lot more attractive. Is it attractive enough? We'll have to see. So that plan 2 is just to close the CME gap Plan 3 is to close 88 thanks to some patterns breaking support at 91,800 and pushing it lower based on the high of this price action in this area. That can take you back into 88. That is the third possible scenario. 3 of them are bullish. Of course, they have that bias that after taking care of business, we still go higher. Some people are already assuming that we're going to do 1. It's a work in progress. It really depends on a lot of factors. On the longer term, the liquidity, it's getting a little bit scary in here to be in a short, to be fully honest. You can see the green in there takes us into the yellow. And we could make a push into 102K by tomorrow morning, in which case either I need to decide quickly where is going to be my stop loss to get out, take a small loss, or DCA. I think DCA is something doable, but is in a short with all this liquidity in here. You really need to fragment your capital to make sure, 1, that you can cover all the liquidity pools that we have now. And that is not the problem. The problem is taking into account pools that do not exist yet. Think about this. These pools exist here at 112 and 125, and that is thanks to this price action. If you get price action around here, something like that, you're going to get pulls at 140 and 130. So if you don't take those into account and your DCA, your fragmentation of your funds was not done in an efficient way, you're going to find yourself in a situation that you didn't account for, which is called needing to DCA to the infinite, to the upside. So careful with that. Long-term holders have been accumulating. That's been the case in the morning, and it continues to be the case. Let's have a look at the liquidation heat map of the last 1 month. In the morning, we have all that liquidity that got really heated. If I update the chart, you can see that that liquidity now is gone. There is room now to go to 102, and that I think is my risk if I decide not to place a stop loss at 99. Since I entered at 97, that 99 is a small loss. And I think now it totally depends how many shorts are going to enter. Remember, I entered at 95 and people started shorting in here, making this too attractive. That forced me to exit and take a small profit at 94 and move my entry at 97. But now I have this 100K that is starting to grow as well. So you might be wondering, why the heck, if you are such a good trader, why are you not in a long? Good question. I enter longs in this area. You can rewind back in time my videos and you're gonna find my entries or on my Patreon, and we took a fair amount of longs. Sure, I exit a little bit earlier than expected. We enter, exit all the way up. Since I'm not seeing all the signs necessarily for this to be the final breakout, it can still be the final breakout. The breakout doesn't need to please me. It's just that the signals that I usually see to confirm it are just not there. And that's why I'm getting more comfy with shorting this rather than longing too late. Notice that 100K is very close to the price, but the one that now is taking the lead as the heaviest level is 83K. Keep a note of that. This morning we have this big boss of liquidity. Let's see what happened, how things have redistributed. Now we have 98K above the price, and we have 92, and we have 86. That's from the past 30 days. Doing some surgery to the price, I'm going to show you a bad boy that hasn't appeared in quite a while, which is this green signal in here. Even I forgot, what the hell was this green signal? And looking at this, doing some surgery, you can see that these are the top traders' average leverage delta, something that I borrowed from High Block Capital account on Twitter that I found really cool. You can see that when they go in average over 15x, with a long, it can become a local top. For example, in all these areas. Not always, of course, no signal always succeeds, but there is a fair amount, 1, 2, 3, 4 signals that have been very close to a top. There's a bunch of signals in this area as well. And let's go to a pump. In a pump, it goes sideways, or in here, it's also going sideways. It kind of slows down the pump, but if you are in the middle of a pump, it's not guaranteed that it's going to be the top. We also have all the signals in red there, which are saying the opposite. It's red because there has been a reduction of the amount of global longs on Binance. That tends to help during sideways to give us local tops. But again, if we go to a pump, like this area where we're going from 49 into 108, we're gonna get some areas where we just go a little bit sideways, or we produce a small local top but still carry on higher. This area, for example, it didn't stop the price, so it's not guaranteed that during a pump having little number of longs will stop the price. Why is that? What is the secret for that? You should think about that, because during a pump, the pump is not only driven by the longs, it's driven by the short liquidations, short squeeze. So if we get a short squeeze in here into 120 or into 110, and you see a small amount of longs, that could confirm that what helped the price going up was a short squeeze, not necessarily actual longs, but in fact shorts being forced out of their positions. At the moment, we also have funding rates in negative, and that is not good for my short position as well. Ask versus bid ratio at the moment is at 0.2, very flat, no alpha there, and the delta this afternoon was around 500k, now is 400k, so the longs are at a higher risk. Again, during a pump, the green delta can go into even 2 millions. I've seen it like that. So it's great when there's still not that bananas zone to stop the price. But once you enter banana zone, all indicators do that 0.1% anomalies that drive everybody nuts. Let's look at the order book, and I suspect that we still don't have trading light yet. We have a wall of selling. Is not that heavy, to be fully honest. We used to have 60 million at 96 that got moved into 97, and then it got racked pull and it became just 38 million, followed by 40, 39, and then 45. So a decent chunk that spread out pretty evenly, and we have the purple whales also buying this rally. They usually lead the rallies. After that, there is a huge vacuum. Let's look at this closer in all this area in here. And up until we get to 110, we just have a little bit of liquidity, of ask liquidity, 20 millions and 37 finally at 110. Support is at 94 at the moment with 30 million. And yes, trading light is still down. S&P is still above the neckline, so things are looking good for the S&P and NASDAQ. It's just the NASDAQ that now is going to face that resistance of 52, and I think I'm just going to keep it like this. Today we have the Elite TA session with my Patreon members, 1 hour of private TA where they get to choose what I do TA, and they can join with audio, share the screen, discuss charts for a full hour once a week. You can join that on Patreon, and tomorrow you can watch the stream for free without joining anything. It's gonna be my YouTube, so you can watch it and decide if it is for you. I have a new campaign on bluffing. This one starts right today until the 15th of May, and traders can get deposit bonuses, and there's also bonuses for volume traded as well. Remember that there is a position airdrop for Bybit. Not all countries have Bybit available. Someone told me that Bybit might be coming back to Europe very soon, so keep an eye for that. $500 position airdrop that allows you to trade for free any of these coins and to keep the profits. All you have to do is find the links in the description for Bluffing, Bybit, or any of the exchanges that are in the description. Thanks so much for watching. I'll see you in the next one. Bye bye.